For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, everybody, welcome back to another Saturday Send Out. This week was the portfolio recovery week, and I say that because some of our portfolios were struggling, but this week everything came out on top and is well outperforming the SPY. We're going to get into all of that right now.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place.
All right, everybody, I am sending this newsletter out to you just a tad bit late. It's 6:10 p.m. on the East Coast right now, and so typically I try to get these out before noon. So we're 6 hours late, but no matter. We've still got a great article for everybody. Like I mentioned before in that quick little intro, all of our portfolios are now outperforming the SPY after this past week. Surprisingly, honestly, because we had such a terrible open on Tuesday. However, that terrible open on Tuesday led to a lot of just incredible run-ups in companies afterwards. And we also saw an incredible run in our weekly stock picks as well because they were all picked after the drop had happened on Tuesday morning. So those all ended up performing well as well. Regardless, quick reminders are copy trading available on autopilot. Portfolio views available on our website, thesimpleside.news. Macro indicators also on thesimpleside.news. And research reports also available on thesimpleside.news. So if you're looking for anything, looking for information about the portfolios, our holdings, anything like that, and you're a paying subscriber, go over to thesimpleside.news. And if you don't have the password, there'll be some links that will direct you on where to go to get the password. And then you'll be able to access all that stuff. If you're a free subscriber, I think a little bit of our macro indicator is available for you to view, but the rest of that is going to be behind a paywall. So just be prepared to get paywalled. If you're a free subscriber and you want to join the Substack, just go to thesimpleside.substack.com/subscribe, and you'll be able to subscribe there. You can also just Google us. If you Google The Simple Side, one of our websites will pop up at the top, and you can go and join us there. All right, without any further ado, let's quickly talk about what happened this past week. I'm going to try to be short today since I'm posting this so late. You won't have to sit here and listen to me talk on for 20 or 30 minutes. I'll try to keep it a little bit shorter. As many of you know, we have our macro indicators that we keep track of. I did a little bit of explaining in the newsletter about how that exactly works. And the short and easy version is we have 3 different macro, I guess you could call them quantitative measuring sticks. And what we do is we run each of those on TLT, which is bonds, GLD, which is gold, and the SPY, which is equities or the S&P 500. And then each of those models kind of spits out a score of buy, sell, hold for each of those different potential tickers. And then we combine all those together into an overall macro regime. Right now, the overall regime is sitting at 0.17, which in general is a slight buy, but nothing that makes me say, go buy 1,000 stocks right now. It's time to back up the truck into the market. That's not what it's saying. It's just saying that the market is relatively looking like if you bought the SPY, gold, and TLT right now, you would go up in the short term. So it's not saying back up the truck. It's also not saying unload all your stocks and run away. It's just saying that the current investing environment is relatively safe. I included in the newsletter a screenshot of the total macro indicator from the website. And it's just a 3-month look at what's been happening. And basically what you can see on that chart is that we've been wavering between a slight buy regime and a hold regime, just kind of back and forth for the economy, which really should come as no surprise. That's kind of typically what happens. You have a point in time where investors get very excited and bullish and they all buy, and then we kind of go up a bunch in the market. The market says, I don't know, this seems a little bit expensive. It sells off a little bit. We hit our hold territory. then everything starts to buy back in again, and that's where it kind of wavers back and forth. Now, one thing important to mention is we saw this same kind of wavering happen just a few months ago during, I say a few months ago, I guess basically a year ago at the beginning of 2025 from January through July. And again, this is for the total macro environment, bonds, gold, and the S&P 500, not just the S&P 500. But then in July, after we wavered back and forth between buy and hold, we jumped up and we hit a strong sell. And if at that time when we hit that strong sell, you would have bought bonds, gold, and the S&P 500, you would have seen incredible performance because the S&P 500 performed well, because gold performed well, and of course TLT kind of underperformed or just kind of stayed stagnant. So anyway, it would have been a great time to buy regardless because gold and the S&P 500 just performed so incredibly well. Again, paying subscribers, if you want to get a detailed look on equities specifically, on gold specifically, on bonds specifically, go to the newsletter. I've got tons of links, go to the website and look at the macro indicator. I've got tons of links in the newsletter that will take you there. That is the most important place to go if you're looking for what I think is the current macro environment. You'll also note, if you go to the website, that we have a macro portfolio as well. Every single Friday, we adjust the weights in that portfolio. And those weights are between SPY, GLD, and TLT. And right now, we are heavily weighted gold. Gold is labeled a strong buy in our model, with the SPY and the TLT labeled as holds. So you can go and find that as well. And as of today, we started our macro portfolio January 2nd of 2026. That portfolio is up 13.37% year to date. So a strong performance. And you'll notice that is pretty much tracking gold as of right now because, no surprise, we've been heavily indexed on gold. Now we're going to talk about our portfolios and our research performance. So as you know, paying subscribers have access to 4 different portfolios: the flagship fund, the tech growth fund, the AI portfolio, and the macro portfolio, all of which are copyable on Autopilot. And again, there's links all over in the newsletter that will take you to Autopilot to go and copy trade those stocks. But the other thing that paying subscribers have access to are our weekly stock research reports. Now, I say weekly, they don't always come out weekly. Sometimes it's hard for me to find something that I would like to post a bull case on. However, in those picks, every single week that they do go out, we send out a bull case, a bear case, and a base case for what we think that stock's performance is going to look like in the future. Then we provide a time horizon, how long we think it's going to take for that stock to reach those returns that we're looking for. And then, of course, we publish everything on the research page of our website so that we can be transparent with the historical returns and the current trades that we have, trades that have closed and everything like that. Just this past week, we had one of our picks close. That pick was Bloom Energy, ticker BE. That hit on January 20th, and we entered into that trade at $132.52, and it just hit the target at $154. And of course, that return is 16.2%. So well done there. We thought that Bloom was going to take about a year before we were going to hit that $154 mark. So the fact that we hit that within, I think, a few months of posting that research report is just crazy. But we've now published around, I think, 16 different stock reports. And of those 16, we've got about 12 that are closed. So either the time expired or we manually closed the trade. We sent out a newsletter and said, hey, this trade's being closed. And that means we have 4 still open. But of the 12 that we closed, 10 of them have closed in profit. 10 of 12 have closed in profit. That's an 83% win rate. And of those that have won, we are averaging a 24.3% return, which is just ridiculous. That's incredible. And a lot of these stocks aren't even going into our portfolios. They're just stocks that we think have a good chance to return X amount over X period of time. And we're investing in them. and they're outperforming. So it's very impressive. I'm very happy with how that's working, and hopefully we can continue to do that as time goes on. Now, as for our portfolios, I just want to highlight that you should ignore the compounded annual growth rate, the CAGR, on the macro portfolio. Since we started that portfolio this year, and it's basically up 13% in 23 days. Yeah, it's showing just like some insane CAGR number, like, thousands of percent compounded annual growth rate. And that's not true. That's not true. Do not worry about it at all. It's just saying that because it's gone up so much in such a short period of time. And so it's like, oh my gosh, if this happened for an entire year, like, we would make so much money. So just ignore that. But our flagship fund is up 1.31%. The macro portfolio is up 13.37%. The AI secondhand effects portfolio up 18.19%. And the tech growth portfolio is up 3.88%. So, in general, very, very well done. And yeah, again, like very, very impressive performance. I think the S&P 500 is up around 1%, maybe less than 1%. So the fact that our lowest returning portfolio is up 1.31%, I think speaks very well to the outperformance that we've had. Again, the stock research performance, 16 picks, 10 winners, 4 still open, 24.3% average return, 83% win rate. And our top pick was Figma at IPO, which returned 142.4%. So pretty solid across the board there. Now, free subscribers, you're done. That's all I've got. It's over. Paid subscribers, you need to go to the newsletter and read through the rest of what I have for you. I'm going to talk about our flagship fund and all the changes that we're making on Monday. I guess in the flagship fund, we're not making any changes on Monday. What's happening is we're going to wait for about a month and see how some things perform, and then we're going to look at adjusting some of the holdings in the portfolio. I kind of give like 3 different options of how we expect that to go in the newsletter. For the AI secondhand effects portfolio, that will have changes being made on Monday. So you need to go through and read those if you're not copy trading with us on autopilot. And then the tech focused growth portfolio also has some changes incoming. We'll be removing, trimming positions, and then adding 2 positions and adding to 3 of the positions that we still have in the portfolio. Like always, we have the weekly picks for those of you that like those at the very, very bottom of the newsletter. Currently, and I literally, I cannot believe this. I cannot believe the performance that we've seen here. Since last year, we started this July 17th, I think. So it's been 79 weeks. 79 weeks. Yeah, that's right. Yeah, it's been 79 weeks since we started doing these weekly picks. The performance, 80.02% over that same period. The S&P 500 up 22.7%. So we're beating the S&P 500 by 57% returns on our weekly picks. I mean, that's insane. That is innumerable and just incredible, and I can't believe it at all. We've really simplified down how we do the weekly picks now. I basically just send you out the tickers and the expected weekly return. I've gotten rid of all this is being driven by whatever kind of moving average, or it's driven by the RSI, or it's driven by the MACD, or whatever the reason is that we're buying it. So if you want that back, send me a message, reply to my email, do something to let me know that you still want that. If not, I'm just going to keep it simple. Tickers and expected returns every single week. These weekly stock picks are also tracked on the website. Again, thesimpleside.news. And then there's a header bar that says weekly picks, and you can go see the weekly picks that are upcoming for this week right there. So be on the lookout for that. And in general, guys, I think that's all that I have for you. I mean, I would like to say just thank you so much for sticking around and joining me on this. I'm going to be trying to send out some more some more research reports over this next week. And I'm hoping that we continue to see this kind of performance with our portfolios. I mean, it's been ridiculous. It's been absolutely insane performance across the board. I could not be happier with how everything's gone. And like I said, man, I hope we just continue on the up and up. So I got nothing else for you. I will see you all next week. If you have any questions, if you need anything, DM me on Substack. Send me an email at thesimpleSideNews@gmail.com, and I'll get back with you. But until I see you next week, stay safe and enjoy the weekend, everybody.